All right, we are 1 minute after. We want to respect everyone's time today, so we will get started. To introduce myself, Krista McAllister. I am co-owner and president of Cerius Executives, along with Pamela Wasley. We're excited to be here today. We talk with hundreds of executives, CEOs, and business owners in any given year. And we noticed this year that there have been a handful of topics that have been trending out of those conversations. So our amazing team here has put together a speaker series this month to deep dive a little bit further into those trending topics. The purpose is to provide some insights from experts in the space. And today, our expert is Bob Manasier, who is an expert in fundraising. Whether you're looking to raise capital or build value in your business, the core principle is the same. Think like an investor. We have a variety of individuals on this webinar. Some have known us for a decade plus. Some have worked with us as executives or as a client, and some have never heard of Cerius before. So if you will, bear with me for a few minutes. Just want to talk through a little bit on who we are and what we do. And as you can see, back when we started 2005, our founder, Pamela Wasley, she saw a gap in both the consulting and the executive search model. There were options on the table for small to mid-sized businesses, but they weren't the best options. You either had to go hire an executive that was well above your budget, or you had to hire someone who was in over their head from the get-go. Building a leadership team that was going to build your company was even more painstaking then than it is today. There wasn't a place to go to with a network of known executives who could come in on an interim or fractional basis. You spent too much time hiring the wrong people and turning over. We saw what was happening in Europe with interim management and knew this would make an impact for US businesses. We needed a new way of doing executive search for both executives who have so much to give companies and companies who need it. There also need to be continuous network of these executives, C-suite, whether they had had long careers, sold companies, or were just at the point and burnt out and wanted to do more and give back more to the small to mid-sized market. We knew that they needed a number of resources, so that including ongoing education, so that they could stay current on the latest business trends and technology. Next slide, Chris. And so we went and built one. What started as a handful of people in Southern California has grown into a nationwide network of thousands of executives across industries and functional areas, both in the US and internationally through our worldwide partnership. Next, there are 3 ways that executives can step into a company. There are even more ways, but we'll save that. That's a whole other webinar I could do. You can either bring an executive in on an interim basis, which is just a fancy word for temporary. You can have them come in on a fractional or part-time basis, couple days a week, longer term, or filling a leadership gap on a direct hire basis, full-time. You've got them in there and they're serving as your VP of sales. Next one. We can move fast to identify the need of the company and match with the executive who has the right expertise, because we've been pre-building this business solution for easy access to fill leadership gaps for close to 18 years. How we work with companies, as you can see, it's very solution driven. There are no job descriptions. We focus on the results needed, not a long list of responsibilities. We can all agree what matters is the outcomes, not how we get there. And we do most of this work on behalf of our clients, as well as staying involved throughout the engagements. A lot of people don't know we cover all functional areas. And Chris, let's just scroll through between operations and finance, human resources, sales, and marketing. And with that, now you know a little bit more about Cerius. I'm going to turn it over to Chris Shepard to introduce our speaker for the day and make us all just a little bit smarter than when we started the call. Chris Shepard,
Thanks.
COO.
Yeah, you bet. Thanks so much, Kristen, for telling everyone about Cerius. Some may know, some may not. And some of you may have a really good handle on how to find business funding. Some of you may not. Hopefully by the end of the call today, you're going to have an even better understanding of how to think like an investor. We've been doing this Cerius Speaker Series for a while now. What we do is take subject matter experts from our network, bring them in, let them talk on the topics in which they are industry leaders in, and everyone is better for it. To talk about the topic today, thinking like an investor, we've brought in a member of our Cerius Executive Network, Bob Manasier. He is the CEO of InFocus Brands and Managing Director of EDA Funding. InFocus Brands is a white label deployed team business builder for true startups and international company expansions. And EDA Funding is the private capital fund of InFocus Brands with access to a full contingent of resources for your business scale and or startup launch with flexible shared risk funding programs. Bob, that's a mouthful. Thanks for all your great experience and thanks for being on the call today.
Thanks, Chris, and hello, everybody.
Bob, as you and our team sat down probably 6-8 weeks ago now, started talking about you bringing your expertise to potential clients, and members of executive teams in our network. There's a lot of topics that we could have talked about today. Your background's very expansive. You've built a lot of businesses in the past. But this idea of business funding is something that kept coming up in the conversations. I think mainly it's one thing we hear a lot from clients as they come to Cerius, don't know how to seek funding, don't know how to structure the company to best get funding. And I also think there's some misconceptions in the marketplace of what business funding looks like. We all enjoy the show Shark Tank, but there's a lot of leadership teams that have taken that and thought all we need is a 3 to 5 minute song and dance and rich people will throw money at us. Bob, is that true or how far from true is that?
I'm not smart enough to make that happen, so I'm going to say that does not work that way. And nor do you want it to work that way, to be brutally honest. So,
yeah, no, there's a lot to unpack there. So Bob, let's say I'm on the call today. I'm a business owner. P&L looks good. We're selling things. Things are going well. But it's going to take a long time to get where I need to go, right? Longer than I wish it would. If I had more money, I think I could accelerate that growth. Where do I start this process of starting to think like an investor and get funding?
So I'm going to start with a philosophy that you don't hear a lot, especially in the startup world. Do not fake it, right? If you're looking for investment dollars, you are literally looking for a partner or a collaboration, and you're not going to start a relationship off on the wrong foot, especially on a bunch of lies or misconceptions. So I like to be brutally honest in all my raises, in all my asks. You have to come at people thinking that they're going to become a partner of yours. And if you start off with the fake it model, it's kind of ruining the relationship from the beginning. And that's not what you want out of the proper capital partner with you. You want somebody who understands where you are, understands where you're going, understands because you've educated them on what you need and why you need it. And they're going to be with you for the long haul. So we always talk about smart money, right? Not just any money. It's the difference between begging for money and actually taking on true investment partners. Smart money brings capital, but it also brings networks and skills that you might not have in your company or that you need to improve in your company. So that's always the way we frame all of our raises. We start with those kind of looking inward. What are we good at? What aren't we good at? What can we share? What can't we share? And the two biggest questions you have to ask yourself is how much money and why you need it. And you have to answer those in fairly complex detail because investors see BS. Good investors know when you're kind of graying the truth, and they want to see that you've done your homework and that it makes logical sense. So that's a good starting point. And then the second point is you have to treat yourself as the expert and the educator. If you are setting it up for a really good conversation, you need to set or level the playing field. Every investor doesn't know your business. They don't know your specific business. So that makes you an expert. You need to educate them on how you work and your unique value propositions, how you work differently than competition. How do you and your team work differently in the field? And do you know the customer journey well enough? Because if you don't have enough sales to back up your raise, you better understand in detail your customer. And now I'll shut up, Chris.
No, that's a perfect setup, Bob. So in your experience, decades of doing this, what are some of the most common areas where you see a business gray the line a little, or maybe upsell the opportunity more than it is? What are just some common areas where companies may be putting their best foot forward, but maybe not the truest foot forward?
I think it always starts with the ask, how much money? Because the next question, regardless of what you've said to me dollar-wise, my next question is why, for what, and back it up, which means proposals, invoices. You can't just throw a bunch of numbers on a page and say, I need $1 million and here's how I'm breaking it down. We're going to do our own due diligence. And that's the other thing that gets missed. And obviously going back to the Shark Tank example, those very smart people on that panel have done a lot of due diligence before that company gets to that show. They know the company probably as well as the owners and the founders. Investors are going to do their due diligence. Regardless of what you say, my money makes me smarter, or the perception of me being smarter. So I'm going to push back on everything you say. And your job really is to prove that you are somebody that we're going to partner with.
Yeah. So it sounds like there's a lot of organization I need to do on the business side. It isn't just grab my most recent P&L and my most recent sales quota statements. Talk about the organization that I need to do as a business owner to really set myself up so that when that due diligence starts, I still come across as the expert in my industry. How do we prepare for those meetings?
Yeah, I wouldn't just focus on the P&L, because then you're going to lock yourself into a cap, right?
Mm-hmm.
On a true startup, and I'll just go back a little to make this, on a true startup, when you start raising money, you are already setting the ceiling on what your company can be worth in the short term. So we try to avoid early equity in any company. We love organic growth. We like customers buying something first, because that validates our presence in the marketplace. And it opens up the potential for not just looking at a P&L, but for you to lead the investors down a journey of why you, the detail that you know the customer journey on. If you understand the habits and the process of how you get customers, regardless of the P&L, and your ask matches up with that, like, I'm going to do this because my customers want this, this, and this, you can probably raise more money with giving up less. And that's the difference between begging and getting capital partners, right? If you're begging for money, you're going to take whatever deal is thrown at you. But if you can set it up and educate the people in front of you, you might be able to get more and give up less, which is always the goal, right? From your side, the business owner side. Investor side, I want the most for the least, because that changes my risk reward paradigm. Did I explain that enough, Chris?
No, that's super great. So I woke up as a business owner. I decided I needed funding. Walk me through how long a process this is. How much time does this usually take to really feel like you've spent enough time to be prepared to now start to go out to market? Not a rash decision, I'm sure. Give me some clarity on the work I should be doing up front and how long that should take.
Yeah, so we always recommend to people going out to try to raise money at the beginning is to put together a 8 to 10 slide deck with very little words on it, and then practice it in front of your staff, your family, who are the hardest critics. Anybody that has ever dealt with a family business knows family is the toughest, and run it by them and see what questions they ask. Because just like you're in business and you understand your client and you're staying in or ahead of your client, you have to understand the investor psyche. So we always make them practice a lot. I mean, presentations for us are a full-time job, but their preparation is they have to know the details of their business. They have to know the nuance of their business too. They have to understand their staff. They have to understand their customer. I'm going to keep coming back to that, because a lot of times that's the difference between taking a deal and getting more. That you literally own the customer. journey, knowledge. So all of that is a lot of work, but you live it every day. So it shouldn't be that difficult to put together. But then we go to the structure. What are you asking for? And that's where it usually bogs down. And that's where the negotiation sometimes goes so long that, some companies go out of business before they raise money. We like to set very clear deal structure targets at the beginning. Obviously, people coming to the table with their own money, their job is to negotiate against you trying to raise the money. But that deal structure kind of sets the floor for the conversation. And that's why, like I said before, the ask has to be in detail. It's not like I need $1 million or I need $100,000. It's why and specifically for what. And then out of that is the potential that can make. I'm not a big projections person. That is all fairy tale. But I do like talking about potential and what I see. And if you can back it up because you're an operational business with historical trends in your own business or in the industry you sit in, that'll go a long way to kind of proving or validating what you're saying. You are telling a story to an investor who has no knowledge of you for the most part, to try to get them to take the journey with you. So think of it that way. You're telling a story and you have to educate them at the beginning so you get them on the same jargon, you get them in the same mindset, and then hopefully you can pull them along to at least being at the table and qualifying themselves as a possible investor with you.
That's super helpful. So all this prep work going into it, let's say that this was 30,000 feet. I know there's a lot more detail that goes into all these slides and the practicing, but let's say that we've got it. I've got everything here. I understand my customer journey. I understand where the company's headed. How do I find possible investors? I'm guessing I don't want to make a Facebook post. I'm guessing there's a better way, right? How do I find people who can really not just fund my business, but as you mentioned, be a partner with me?
And I'm just going to go back one step about the presentation deck, whatever that is. There's
Sure.
always two versions. There's one that you email out, and I'm not saying to everybody who asks, and we'll get to that, to your question, Chris, but there's an email deck that is heavier with text and background and research. And then there's the live presentation deck that has mostly images, very large font, impact statements on slides. So there's two very different versions. One, because most institutional or advanced investors don't want to meet you right. They want to go through your deck. That's the one that has more information. The one you're in person, you know your business. If you're reading off of a screen, you've already lost them. And I'll give you one quick example before I get to your question. I once flew from New York to London to do a 10-minute presentation to a very large firm. I didn't get 10 minutes in, and they told me no. And I learned a lot from that. But the biggest one was I did not qualify them enough. And getting to your question is, you need a system of qualifying them. You don't want to share all your details to everybody because some of the people that are going to ask for those details are competitors. So you need a qualifying. And a lot of times you can start with people you trust. You can start the circle of influence with staff, board members, advisors, vendors, clients. That's where I usually start. And then we've built a system where we qualify people by the questions they ask us to make sure that they are kind of interested, not just kind of seeing what's out there. And we bring them along on a 3-part journey with us, where we give them pieces of the information and see what they ask us. And based on what they're asking us, we either progress them through or just say, this isn't a good deal for us. And having those filters lined up early in that earliest talk with yourselves and your team about looking inward, that is really important. What do you want beside the money? Is it culture fit? Is it a certain network? Is it a certain industry expertise? Those all have to go into the bucket too, because you do not want to just blast your deal around the universe, especially in this day and age where everything ends up on social media anyway. So.
Right. So walk me through some of that qualifying, right? Because if I'm a business owner, I just need the money, Bob. If I just had the money, right? That's not true, right? Walk me through some of those qualifiers. What should we be saying no to as we're looking for investors? What is that funnel? How do we figure out those that are a fit?
Well, I think that's very specific to the company in question trying to raise the money. I will say most fundraising is a lifetime commitment. When you need it, and if you haven't prepped for it, you're never going to get it in time. So it should be something you're always considering, and you have some kind of structure in place of what you're trying to do. Even if you don't launch it, I'll just use our filters. We usually send out a one-page overview of what the deal looks like and why. People ask for that, they get it. If they don't come back to us with anything else except saying, can we see the full deck? And they haven't asked us any questions, they haven't asked for any clarification, we rarely don't share the deck with them, because we want to get interest and we want to pull them toward us. And if we just throw everything out at them, we're giving them all the power. I think the biggest thing companies looking for money give up is their power and their expertise in their business. Listen, I know the money's important, and we've all been there where we just need money, but you can't give up the kind of negotiation peer to peer, because if you're begging, they're going to know it and they're going to feel it, and you're going to look like investors are savvy. They get it when you're really desperate, and they're going to take advantage of it, because the less I give you and the more I get out of your company, you've made my risk reward look better to my funders or to my partners.
So start early, be strategic. Who am I sending that one page to, right? I've done the friends and family, I've done the close things. I'm now, how do I get Warren Buffett to give me money, right? Is that the target? Where should I be going? I'm not.
Just saying right now, you're not.
But I have a really good idea about my business. If he would just listen to my business pitch, Bob, he'd love it, right? How do we go from friends and family to the top of the food chain, or where should we be targeting that work?
So my assumption is we're all operational business people. So we've taken our ideas and we've executed. Investors are looking for the same thing. No idea has ever made anybody any money. It's the execution of the ideas. We literally see thousands of great ideas every day that will never go anywhere, because the people don't even understand the structure they need to build to get that idea off the ground. So first is, it's not your mission, it's not your idea that's going to sell it, it's probably your team and your expertise. And going back to probably 10 minutes ago when I said, know your business and know your customer. The more you can prove that to an investor, the more value you have to that investor, because investors worry about their investments, right? So the more you can take off their worry, and the more that you show that you're truly an expert in your business, the better that relationship's going to be from the beginning. Relationships, if they start strong, usually stay strong. And the other thing is open communication. You want somebody who's openly collaborative and works with you and communicates. We also want the same thing as an investor. We don't want to know about something in the media if something goes bad. We want to know ahead of time. And I think sometimes creating that open dialogue at the earliest moment with any potential investor kind of startles them, but also makes them more intrigued about what you're doing. We use social media and media to tell stories about what we're doing, right? You have lawyers, you have financial advisors, you have a network, a center of influence network that you can always pull on. And the other thing we all have to get comfortable with is asking, if this is not a good deal for you, who might be interested? It's that warm lead. Cold calling does not work. I know people believe in it and they think it's a lost art. I don't want to cold call somebody to be an investor in my company. I want to kind of know something about them before I meet them, so I can tailor my presentation to them. But I also want validation that they're not just somebody on the sidelines that are going to ruin the culture of my company. Earlier companies get ruined by the wrong money, because it changes the team, it changes the culture, it truly changes the trajectory of where the company could go. So you got to be smarter that way. So I want warm leads all the time if I can. If I have nobody, I would go into putting some expert media up in the universe and seeing who comes toward us.
That's super great advice. I want to get to deal sheets and term offers here in a second, but I would be remiss. You mentioned the word, the wrong money can really upset the team, cause a lot of problems in early stage companies. Talk about the importance of the leadership team when you're preparing. We're in the leadership team business. We build them, right? It's our role here at Cerius. How important is it that it isn't just the financials are right, but the team's right when you're going out to ask for money?
You're going to create here's the assumptions. You're going to create and spend a lot of time practicing on your presentation with your team. Deals are won and lost, not during the presentation and the Q&A after. Having a unified team, having a team that knows its place and role is so important to the investor mindset. If you have a great leader and everybody else is kind of just sitting there, that's not going to work, because one person is not going to lead a team. Business is too difficult, especially with more money. You're probably going to get more complexity. They want to know that the team works as a single unit for the same mission and vision. A lot of times on larger companies, we even go on the floor just to meet staff and employees to see if that culture trickles down and percolates the whole world, or just in the C-suite and all the people are over here in kind of an adversarial antagonistic culture. So it's very important to have a unified team that understands its role, its expertise, and isn't afraid to speak up when the questions pertain to their area of influence and specialty.
That's super helpful. Thank you. How should we be thinking about deal sheets, term offers, all of that? Give us some insight there. We've got money that we're starting to have some of these conversations. They're going well. Presentation work, Q&A worked. Due diligence is going well. We're getting close. Fill us in.
Yeah, I like to think realism, right? Somebody's not going to give you $1 or $1 million. They're going to want to expect a significant uptick on their million or $100. Whatever they give you, their money's more important than yours. That's just the reality. You also have to think of deal sheets as capping the top of your company value. So you got to worry about that at times. I also think that you have to hold a hard line. There are so many rules that if I own 20% of the company, you can't sign certain deals without my signature. Do you really want that? And that's probably something you should talk with your financial advisor, your legal team with, is to make sure that you're not giving away too much, where you could lose some of the control or some of the speed you have to act on to make your company truly hit those marks. The other thing in a deal sheet is no one's giving you all the dollars you're asking for in one shot. They're going to tranche it out. So if early on, when you're building your deal sheet, create a milestone tranche. If I want to, I'm only using $1 million because I'm very simple-minded and I need to keep the math straight. $1 million is total, but I'm going to tranche it out in $250,000 increments. And the first $250,000 goes to X, Y, and Z specifically. And here's what we expect. Here's our milestone we're going to hit. It could be number of clients, could be number of users, it could be a revenue increase, it could be an increase in staff and output. Whatever your industry is, you need milestones or KPIs that hit that. And that's what you're making the investors pay attention to, what you want them to pay attention to. And then you both know very clearly when the next tranche comes in. Like, that's really important to kind of mitigate that adversarial relationship that you don't want with any investor, right? That kind of negotiation and adversarial relation does not help your company. It takes you away from your true calling, which is building a better company with the money.
This has been super helpful, I think, to give everyone on the call a lot more insight to thinking like an investor, right? What should we do before we get out to market, start to look at this? Last thing I want to ask, and then I want to bring Kristen into the conversation. You've mentioned this a time or two in some of your answers, but how do we as a company vet investors, and how important is that? What does that look like? You mentioned bad money stories companies. Help me understand how to see bad money, investors that aren't a fit. How do I vet them?
Hey, going back to when you're originally thinking about what you want to raise, have some really important filters in place. Just like when we start looking at hiring people, we have certain filters that are going to knock people out. I would have the same filters for investors, like, because it's not just the money that you want. You want the other intangibles, network, skill sets. You also want a certain culture, right? If they're going to be very difficult from the first meeting and just constantly push against everything you say instead of having a real conversation, that's not going to change once they give you money. That's only going to get worse. So you got to look at that. Like, is this somebody I can literally be a partner with? It's just like starting any relationship. Is this person going to drive me crazy after 3 days? Or do I understand the give and take of our relationship and we have open and honest conversation? Right. So we want investors to push against us because we believe the magic lies somewhere in the middle of all of our conversations. That's kind of a philosophy of all of our companies. But I also don't want somebody just to say no. Like if you're going to say something, back it up and prove it to me that you think you're right. I think that filter goes a long way for looking at investors. And also asking them how they want to be dealt with. Some don't want to hear from you except when you send them a check, and some want monthly updates. What works with your company? Like you have to look at that as a filter. If they want weekly updates and you're a 7-person staff and somebody has to dedicate, 2 or 3 hours for keeping this communication every month going, is it worth it to you? So all those things have to factor into how to vet an investor.
Bob, this has been super helpful. I want to bring Kristen in. She's been a business owner for decades. Kristen, questions for Bob? Help take us home.
Yeah, Bob, what I appreciate is all of your advice just rung true. And as a business owner, even if I'm not raising capital, there were some core principles that you gave that whether we act like we're always raising capital, act like we're always going to sell the business, because they're the same principles. Know your business, know your customers, have the right culture, and have a leadership team that's gonna build your business and bring value. And that's that catch-22 when you're going for investors is, if it's not something that you're willing to invest in, knowing that you've got the team and all the pieces together, why is someone else going to invest in it? And what are those puzzle pieces that they're going to bring? An investor is not going to save your company. That's for you to do. And I love that your sound of advice, whether you're starting the business or you've been in the business 20 years, look at it from that investor's perspective. I really appreciate everyone here today, and especially Bob, our expert, subject matter expert, Chris, for guiding us through the conversation. This is the last of our May leadership series. We will pick it up again in a couple of months. Meanwhile, I suggest everyone follow us on LinkedIn. We'll continue the conversation there because I saw all the heads. We all look like bobble dolls, Bob. We all have something more that we want to add and what we want to say. Let's continue that conversation on our LinkedIn page, and we look forward to seeing everyone at the next one.